And so when a judge issues a judgment or a fine, he's telling you, I want you to pay a $40 fine for speeding. Okay? $40 of what? Lawful money of the United States. Now you got it. I don't have $40 of lawful money of the United States, Judge. Don't you give me any specious arguments over this fictitious money issue and blah, blah, blah. All right? You see why now you have to be judgment-proof? I was just in court today and got a judgment laid against me for $2,000. $2,000. Wait a minute. I don't know what the hell it was. It was 2,000 something. I don't have any dollars. A dollar is a unit of measurement. A dollar is 371 1/4 grains of silver. And that isn't First Gordon 414. That's the Coinage Act. Not me. Don't get mad at me because I'm telling you what a dollar is. And in Idaho, all money of account is kept in dollars. So when the judge tells me you'll pay this guy $2,000 lawful money of the United States, gee, I'd like to, but I don't have any. To pay that debt, I would have to pay it in gold and silver. I don't have any. I'd pay it in silver, which is the money of account. But we used to pay it in gold, which was then valued against silver. Reading on here, thereby permanently fixing the constitutional standard of value or money of account as a unit of weight. The money of account is a unit of weight of 371 1/4 grains of fine silver. It isn't just 371 grains of silver. It's got to be fine silver, which I don't know what the standard is exactly, but I think it's 0.999 fine. I think that's the standard. If it isn't, don't split hairs. It's something like that. But there is a standard that this silver can't have too much, gross or copper or something else in it. It coined American dollars as money containing this intrinsic value of silver. There it is. Coinage Act, and there's a whole number of Coinage Acts that were covered later, and when I get into that subject matter on the tax issue, I'll cover that in this book. I just wanted to bring it to your attention now under money, so that as we progress along and I start talking about money, I want you to, first of all, read this Miracle on Main Street so that your level of understanding, which may be down here, I talk to people all the time, though, that are smarter than I am. Their level of understanding is up here. But for the sake of teaching everybody in a uniform manner, we have to assume that you don't know anything about money. So now we're going to tell you, read Miracle on Main Street, and we have a brief, which is called the Money Brief. And I think that money brief on this particular section is just about time to put that in, and I think we'll do that. So we're going to send you this money brief. It's I don't remember the exact name of it. I'll get to it here in a minute, and I'll probably read it to you right here on this tape. But it's the one on dollars. And I'm going to send that to you. Now, your level of understanding then is going to come up to here. Then when we get up to lesson 24 and we start talking about income tax, you'll be able to follow the dialogue, because the dialogue is going to come out of what we're learning here together, so that we all have the same level of understanding and we can push ourselves up. The way I liken this is, I'm going to push you up to the next ledge because both of us can't get up there. So I'll push you up there, then I want you to drop a rope down, pull me up. Now, the next issue I think that I want to bring up, I brought up Article 1, Section 10. Let's talk about what a chosen action is. Let me look up this definition here of a chose in action. Okay, then a chosen action, according to Bouvier on, let's see, this was the 1914 edition of Bouvier, is a right to receive or recover a debt or money or damages for breach of contract or for a tort connected with contract but which cannot be enforced without action. All debts and all claims for damages for breach of contract. Open accounts are unliquidated accounts. Certificates of deposits. It is one of the qualities of a chosen action that at common law it is not assignable. And in equity, from an earlier period, the courts have viewed the assignment of a chosen action for a valuable consideration as a contract by the assignor to permit the assignee to use his name for the purpose of recovery and consequently enforce its specific performance unless contrary to public policy. So a chosen action, then, is a right of recovery to the property that you've given up to the bank. When you walked into the bank and you made a deposit, you gave title to the property to the bank and received a chosen action for yourself. That's your right to recover subject to a contract, and it's regarded as a contract. So where does that leave you? That leaves you then with a mere right to recover based upon the terms of the contract. What are the terms of the contract? Take a look at that signature card you signed and the rules and regulations of the bank. They don't have to pay you for 90 days in some cases. They can freeze your account. The IRS can come in and grab it anytime they want to. You see, the bank is a collection agency for the IRS, and the IRS is a collection agency for the Federal Reserve System. There is no money in this country, and since we gave up our money in 1933, we've been left then as insolvents upon national bank credit. When we have those $5 bills, it's the next best thing that we have to the money of account or lawful money of the United States. And so we've begun to use a term called a merchant and trader at law on a cash basis without recourse to standard lawful dollars. The Congress then has deprived us of our constitutional right to our money. And so we're simply using what is in the coin or the currency of exchange that's in circulation, what's available to us. But we have steadfastly refused to deal in the banks and to accept their privilege, because it's that privilege that binds you to the income tax. That's the thing that binds you then to interstate commerce. And interstate commerce is pervasive in all of the states and in almost everything we do because of those Federal Reserve notes. All right? Lawful money and legal tender are not synonymous terms. When we look at the word lawful money and we take a look at the Coinage Act and we look at the money issue, we find that lawful money is coin. And lawful money being coin, it has to be precious metals because of Article 1, Section 10, and because of the Coinage Act of 1792, and the intent of the Congress and the intent of our forefathers who, when they formulated the Constitution of the United States and those early Coinage Acts, wanted to do away with paper in its entirety. You know, paper money and debased coins have been around for thousands of years. I think they started with Nimrod at the Tower of Babel. And there's nothing new about it, and every time that a coin is clad or every time a paper dollar is issued, it's a systematic attempt on the part of bankers and government to steal from the citizenry. Every time the government inflates the currency by 5%, they rob you by 5%. You went out and did, pursuant to a contract, a certain amount of work, let's say 8 hours of work for $40 at $5 an hour. And you continually do that, and you're expecting a certain amount of return, a certain number of beefsteaks or beefaroni or hamburger helper, whatever it is you're looking for in return for those 40 hours of work, or that $40 of work, rather. Now, when you get $39.50 worth of return, and then $39, and then $38, and then $37, what happens is you go into your union bosses, etc., and you say, well, we need to strike for more money. You know, and then we have this endless revolving door of bank credit and inflation, and more bank credit and more inflation and deficit spending. And unless or until the citizens decide that they're going in on the courtroom floor and demand their rights and demand lawful money, which can be done in short order in the courts, but it'll never be done in the Congress. By going to the Congress is like going to the fox and saying, fox, would you stop killing the hens? What you need is the farmer with the shotgun who's going to kill the fox or run the fox off. I want to read to you a couple of cases here right along this line. One of them's from Idaho 1, page 170. Boy, that's an old case. That's about 1889 or 1890 here in Idaho. I want to show you here what this state thought about these bills of credit or bills of exchange. It will not do to say that their interest in the welfare of the state and their responsibility to their constituents will be sufficiently suitably or sufficient safeguards against corrupt legislation of this or any other character. Suppose the powerful mining and other corporations doing business in this territory were to concentrate a heavy and combined moneyed influence upon a corrupt and venal legislature. You know, here is your Supreme Court of the state of Idaho in 1890 saying, well, let's just suppose that the mining interests were to lavish money upon the legislature. Well, isn't that what lobbying is all about? Isn't that what the majorities and the mobocracy always do? Don't they bind themselves together in the Gray Panthers or in the National Association of Teachers or the AFL-CIO or the Teamsters Union or whatever the organization might be, to go to the legislature then to shower them with money and parties and political contributions for re-election? And then don't they have the legislature pass statutes that benefit them? Then the citizen, the worker in the mine or the farmer or the small businessman, he says, well, what justice is there for me? How can I get justice? You get it in the courtroom, on the courtroom floor, like this. Listen on. An institution not entirely unknown to the history of our republic and should procure the passage of an act making their certificates of stock lawful money in the payment of taxes. I've got to read this over from the beginning so you can understand it a second time. That's a powerful statement by a body of jurists. Do you mean to tell me that someone could just issue paper and pay their taxes with it? Powerful corporations would just issue paper and pay tax? I think it would be difficult to find a lawyer who valued his legal opinion as worth anything who would be willing to defend such an act as valid. In 1890, your Supreme Court says, I don't think you could find a lawyer who would defend the act of a corporation paying its taxes with paper that it issued. Today, if you were to walk into a courtroom and suggest that paper money was illegal and unlawful, they'll laugh you right out of the place. I've never seen a lawyer. Oh, I'll take that back. There are a couple, 3 lawyers who believe in sound money. But do you see the difference between 1890 and 1980? In about 90 years' time, we've moved from our status to contract. We have given up our right to pay our debts at law for a privilege to discharge our debts in equity and be perpetual credit debt serfs on feudal land. We've sold our birthright. Worse. Wait a minute. We didn't sell our birthright. What's worse, we didn't even give it away. We paid them to take it. You know, I've said in the past, in Poland, their freedom was taken from them at gunpoint. In the United States, we paid the powerful corporations to take our freedoms. Let me read this over again so that you can get it in its entire context. It starts off, this is a case having to do with taxes and mining interests and lobbying. It will not do to say that their interest, that is the interest of the corporation and the welfare of the state and their responsibility to their constituents, it will not do to say that their interest, that's the legislative interest, in the welfare of the state and their responsibility to their constituents will be sufficient safeguards against corrupt legislation of this or any other character. Suppose the powerful mining and other corporations doing business in this territory were to concentrate a heavy and combined moneyed influence upon a corrupt and venal legislature, an institution not entirely unknown to the history of our republic, and should procure the passage of an act making certificates of stock lawful money in the payment of taxes. I think it would be difficult to find a lawyer who valued his legal opinion as worth anything who would be willing to defend such an act as valid. Well, in 1890, if that's when Idaho 1 was written, it may be, since it was a territory at that time, I've gone back to 1863. I think Idaho became a territory in 1863, and I don't have a date on this. One of our students dug that out of an old law book and brought it to us. And there's an illustration for you. You know, our Federal Reserve banks in the Ninth Circuit Court of Appeals in a case called Lewis versus U.S. has just decided that the Federal Reserve System is a private corporation. And what does that private corporation do? It issues pieces of paper to pay its taxes. It issues pieces of paper and gives it to the citizens out here and inflates the currency. They sit in the counting houses rubbing their hands while you and I work in the fields laboring to produce their substance. Let me read on to, here's a Supreme Court of the United States case. It's called Collins versus Virginia in 6 Wall 101. That 6 Wall 101, it's an 1821 case. Now I want to stop here for a moment, and I want to bring something to your attention. When you go into the courts and you mention that a case is Georgia versus Brailsford 1796 or 94, and Cone versus Virginia, Supreme Court of the United States 1821, lawyers will hoot and deride, oh, that's an old case, 150 years old. I had one do that to me the other day, and I said, oh, I'm terribly sorry. Gosh, I didn't realize that a case 150 years old was out of date. When do Supreme Court decisions expire? Is it every year, or every 5 years, or every 10 years, or every 50 years, or every 100 years? And is that done by statute? Is that some constitutional provision or enactment that nullifies Supreme Court decisions and opinions over a certain period of time? The Supreme Court of the United States, when they were talking about the Miranda Doctrine, went clear back to John Lilburn in 1637 and cited a case in 1637, friends. You know, the Supreme Court in Washington doesn't have any hang-ups about going back 200 or 300 years. You know, truth is the truth, and it doesn't change in 150 years. What changes is the legislature. And how did they word it here? Let me give you a good word here. The legislature, a venal legislature, V-E-N-E-L, look that word up. That ought to be a real revelation. That's almost like calling them prostitutes. A venal legislature, an institution not entirely unknown in the history of our republic, or a practice not entirely unknown in the history of our republic, could be bought and sold. They change from year to year. You never know what the laws are going to be next year. You don't know what the driving laws are going to be next year. You don't know what the changes this year were made that superseded last year. But there's one thing about the Supreme Court. It stays the same. It's not quite as good as the Bible, which is the same yesterday, today, and forever, but it's the next best thing. And one thing about Scripture that I've noticed is that Scripture is a legal book. This Bible is a legal textbook. It's a law book. It appears that God is a little more skillful, though, than most of us. He can say more in 10 commandments than the rest of us can say in 10 or 15 books and make it stick and make it have some meaning. I notice that the Supreme Court is about the same way. They seem to be able to say more than a page or two than most lawyers can say in a book or two. Listen to this Collins case, though. This case is still vital. It's still viable. It's still the law of the land. It's still the way truth and money and law is. You know, the Fifth Amendment doesn't change because of President Reagan or anybody else who says, I want to do away with the exclusionary rule. The Supreme Court's still there, and the Supreme Court still makes the rules pursuant to the courtrooms and pursuant to law. Let me read this to you. It's about money and debt. The case of a state which pays off its own debts with paper money no more resembles this than do those to which we have already averted. The courts have no jurisdiction over the contract. They cannot enforce it nor judge of its violation. Let it be that the act discharging the debt is a mere nullity. An act discharging a debt is a nullity in law, and that it is still due. When you discharge a debt, friend, it's a nullity in law and it is still due. Yet the federal courts have no cognizance of the case. But suppose that a state, to institute proceedings against an individual which depended on the validity of an act emitting bills of credit. Suppose a state to prosecute one of its citizens for refusing paper money, who should plead the Constitution in bar of such prosecution. If his plea should be overruled and judgment rendered against him, his case would resemble this, and unless the jurisdiction of this court might be exercised over it, the Constitution would be violated. and the injured party be unable to bring his case before that tribunal to which the people of the United States have assigned all such cases. And that's Article 3, Section 2. The people of the United States have assigned all cases between states and persons or parties, which should be sovereigns and individuals, in the Supreme Court of the United States. It is most true that this court will not take jurisdiction if it should not. The Supreme Court will not take jurisdiction if it should not take jurisdiction. But it is equally true that it must take jurisdiction if it should. So your high court will take jurisdiction if it should. The judiciary cannot, as the legislature may, avoid a measure because it approaches the confines of the Constitution. We cannot pass it by because it is doubtful. With whatever doubts, with whatever difficulties, a case may be attended. We must decide it if it be brought before us. The Supreme Court must decide it if it's brought before them, and if they have jurisdiction, and if they should take jurisdiction. We have no more right to decline the exercise of jurisdiction which is given than to usurp jurisdiction which is not given. Now, this question of money has got to be brought to the Supreme Court of the United States. To think that the Fox, the legislature, or the Congress is going to give up on paper money is ridiculous. I wouldn't even consider such a thing. If I was in their position, I would be on the other side of the fence. I'd be busily rubbing my hands in the money houses, robbing you of your substance. But since I'm one of those that's being robbed, I too, then, want to have my substance back, which is gold and silver. And now, let me pause here at this subject and let this subject go now of choses in action, and let's take up this thing of the clad coins. And let me show you what one of the fellows is doing here in the state of Idaho. This thing of clad coins is an interesting topic because there's a loophole in the law here that everyone can take advantage of. Whether or not you personally can utilize the loophole or not will depend upon your status, and it'll depend upon what your business dealings are and whether or not you need to use this loophole. But listen to this. A fellow down in Pocatello was in Boise here the other day, and he wanted to buy a book. And I said, well, the book is $10, and he went out and he brought in a roll of quarters and he gave it to me. And he says, I pay all of my debts at law. And I thought, well, that's a novel twist. You're going to give me this copper and claim that you're paying your debts at law? And he said, well, certainly I'm paying my debts at law. I'm using coin. And now I want you to give me a receipt that says paid at law with coin. And I thought about that for a moment, and I go, well, wait a minute, paid at law with coin? Gee, that's a novel approach. And I said, well, how do you work that? How are you doing that? And he said, well, I go in to buy a pair of boots. And the man says the boot's $50, and the tax is $2, and that's $52. And so he says, okay, separate the tax from the product. The man does. And he says, now put on the receipt paid at law with coin. And the man does. And he reaches down and he gives him 2 rolls of Ike dollars and a roll of quarters and picks up his boots and says, I'm not a person required to pay the tax, so I'm going to buy my product, that's the boots, and leave. Well, obviously the merchant isn't happy, but he doesn't want to lose the sale. If the merchant gets smart with him, he just says, here's your boots, I'll go buy them somewhere else. I don't need to deal with you. But watch what he's doing. You see, it's the Congress that has been derelict in its duty. The Coinage Act of 1792, 1853, 1834, 1878, and even as late as 1978, declares that coins are lawful money. You see, a coin is assumed to be lawful money of the correct weight. In the old days, that is in the Coinage Act of 1834, if you debased a coin, the penalty was death. Debasing the coinage had the death penalty ascribed to it. Today, I don't know whether that statute still stands, but let me tell you, we'd have to execute all of our government officials because they're the ones who have taken the clad coins like this little quarter-sized dollar, what was that, Anthony-sized dollar, and It costs 3 cents to make it, and they put it out in circulation. So here's your government, here's your treasury taking 3 cents worth of metal, and then they come out to the wheat farmer and they take $1 worth of wheat, don't they? You see, that's robbery when you do that. And that's the thing that our founding fathers were against, and that's exactly what King George in the Articles of Confederation was doing to people, printing money, taking the wheat, and giving the guy this bill of exchange. And so that was outlawed with the coinage acts. And we went to hard money and we stopped robbing and stealing from people. But now watch what's happening here. If you stop and think about it, the government issues the quarter, and pursuant to the law, the semantics are, a coin's a coin. And whether you got a silver coin or a clad coin, you can only assume that it must be silver because it is a coin, isn't it? And so what this fellow is doing is, all of his receipts are marked paid at law. So he's giving substance for substance, and he owns the boots. As opposed to the guy who only discharges the debt. See, the Federal Reserve note or a check or a credit card can only discharge an obligation that has to be passed on to someone else. And remember what we saw here in Cohen versus Virginia, where it says the courts have no jurisdiction over the contract. They cannot enforce it nor judge of its violation. Let it be that the act of discharging the debt is a mere nullity. So when you go into a store and you discharge the debt, it's a nullity. You do not own those boots. The Federal Reserve System owns those boots because you bought it with their debt note. Okay, that's not the case with this fellow down in Pocatello. He goes in and he discharges. Now, when he gave me the quarters, I knew immediately that those were not lawful money. But, of course, that isn't the definition of a coin. The definition of a coin is lawful money. But a Federal Reserve note is not lawful money. It's legal tender. A tender is an offer. Let me offer you this book for something. But when I tender a product, right, tender to you a goods or services or something like that, I'm giving you property for property. That's payment. When I give you an ashtray for a pen, that's paid at law. When I give you a coin for that, I've given you what appears to be 25 cents worth of silver or a quarter worth of silver. Now, we know that the silver isn't in there, but the semantics are that it's a coin, and that's lawful money. Let me read to you here from the Coinage Act of 1978. Finally, Congress enacted the Coinage Act of 1978, providing for the base metal Susan B. Anthony dollar. For reasons more closely linked to aesthetics than to constitutional law, the public received this latest bogus dollar with monumental apathy, if not contempt. From a store of intrinsic value, Congress had finally reduced the dollar to an intrinsically worthless token, more useful for propagandizing such faddish political causes as feminism more than performing the true office of constitutional money. As a practical matter, then, the monetary structure of the United States today rests on two pillars. A base metal coinage minted purportedly under the power to coin money in Article 1, Section 8, Clause 5, and B, irredeemable Federal Reserve bank notes emitted purportedly under the power to borrow money in Article 1, Section 8, Clause 2. Any constitutional foundation for these two pillars, however, is conspicuous by its absence. Little need to be added to the analysis presented heretofore to expose the constitutional invalidity of the contemporary base metal coinage that passes for the money of the United States. So here's your base money, which passes for coinage. Nobody has changed the terms, conditions, precedent for the new base metals, you see. Congress has the obligation and responsibility to make sure that that Susan B. Anthony dollar has 371.25 grains of silver. It's not your fault and it's not my fault that they don't. So when you walk in and you pay with a Susan B. Anthony dollar, that's called a coin, and that's called money of account, and that's lawful money of the United States, even though we know that it doesn't have what it purports to have or what the Constitution claims it has to have. In principle, base money coins may have a place in a constitutional monetary system, but only if the government recognizes that they are not upon the same footing with the other. But you see, the government doesn't recognize that difference. it recognizes them as having equal footing. And if you went into a bank and you gave them a Morgan dollar and a Eisenhower dollar, they wouldn't recognize any difference in that. None at all. So if the bank won't recognize any silver difference or monetary difference or value difference between a Morgan and an Ike, why not pass the Ikes off as Morgans? Constitutional coinage of gold and silver. This requires that Congress explicitly provide, as it did in the Coinage Act of 1853 and the Subsidiary Coinage Act of 1879, that the base metal coins or subsidiary coins of precious metal have a strictly limited legal tender effect and themselves be exchangeable dollar for silver or gold money of the full constitutional standard. But they're not doing that. You take silver dollars into the bank and you're going to get Ike dollars back or Federal Reserve notes. You're not going to have any recognition of a difference between the two. In practice, though, today's base metal coinage satisfies neither of these requirements. First, in the very act that initiated the creation of debased clad coins, remember, debased clad coins in 1965, if you did that, that's a crime. When your government does that to you, that's law and order. Congress once again declared that all coins of the United States, regardless of when coined, all coins of the United States, regardless of when coined, shall be legal tender for all debts, public and private, public charges, taxes, duties, and dues without any limitation or qualification. How do you like that? I know of a fellow here who converts his income to silver. He just works at the opposite direction. Now, this man happens to owe the income tax, so here's what he does. He earns $50,000 in Federal Reserve notes and converts that to silver dollars. Now, $50,000 worth of Federal Reserve notes won't buy more than about 600 or 700. Or will it? Let's see. 50 to 1, no, it would buy about 2,000, I guess, silver dollars. And so he's got $2,000 of income. Why? Well, because they shall be legal tender for all debts, public and private, public charges, taxes, duties, and dues without any limitation or qualification. And there's a footnote here, number 842. It's the Act of July 23rd, 1965. It's Public Law 89-81, Title 1, 102. It's now 31 U.S.C. 392, passed in 1976. So if you're paying income tax, what you should do is convert the Federal Reserve notes to silver and keep track of it, and then file your taxes based upon the silver. You can use that ruse, and if ruse is the right word, perhaps it isn't. If the Congress and if the banks won't recognize any difference, then why don't you just take your Federal Reserve notes and convert them to silver and then pay the tax on the silver in Federal Reserve notes? They're interchangeable, so says your government. Remember, you take a Morgan into the bank and say you want $12, they'll laugh at you. They'll give you one Federal Reserve note for a Morgan. So in practice then, the logical solution for those of you that have income, I'm going to move this up a little bit because right now I think silver's trading at about 11 to 1 or something on that order. And the lower coins have less silver in them, so you can buy junk silver cheaper than you can buy silver dollars. Now, you go into the bank, let's follow this logic through, you go into the bank and you cash a check for $1,000. Okay, now there's your $1,000 in Federal Reserve notes. Now what they want you to do is to pay 25% of that, or $250 in income tax, don't they? No, don't do that. What you do is convert the $1,000, take the check that you get and take it to your coin dealer, cashed at law, without recourse. You give it to the coin dealer and you buy coin. Now, you've traded your property, that's your paycheck, for what? Coin. And get a receipt for it. You can do this lawfully and legally. Just take it right in there to your IRS and say, this is what I did. I got a piece of paper from my employer and I took it to the coin dealer and I bought coin. Lawful money of the United States. Tradable 1 for 1. What did your government tell you? They shall be legal tender for all debts, public and private, public charges, taxes, duties, and dues without any limitation or qualification. And when you do that, you're going to trade your $1,000 paycheck, that's 1,000 Federal Reserve note paycheck, for about what? Maybe $100 worth of silver or something like that, because that's really all you're getting paid. Now pay your taxes on $100 of income, because that's what you've earned. Now, if it's a paycheck, of course, you don't have any income, but if it's stocks and bonds and dividends and things like that that are taxable, just convert them that way and then go into the court and argue it that way. You never got Federal Reserve notes. You got a piece of paper with some ledger entries on it, and you took it in and you traded it for what you could get for it, and it was 100 silver dollars, and you took the 100 silver dollars. And then what would happen if you took the 100 silver dollars to the bank? They just give you 1 for 1. Got a guy here who's been doing that for years. Now, getting back to the story flow here, on its face, this legislative direction indicates that a clad coin containing no silver or gold whatsoever has the self-same legal tender value as a constitutional silver dollar or a properly regulated gold coin, even though the clad coin has no intrinsic value in precious metal and is improperly regulated with respect to the constitutional standard of 371 1/4 grains of fine silver. So it's improperly regulated, but it's not your fault. Let the IRS and the Fed worry about that problem. When they give you back lawful money that trades 1 for 1, well, then you'll pay your taxes 1 for 1. But in the meantime, that'd save your tax bill tremendously. But don't deposit that check in the bank, friend, because when you deposit that check in the bank, legal title moves to the bank, and the bank gives you a chosen action or an equal or an equitable right of recovery. You take your check down and you sign it over and give it to the coin dealer or the gold dealer. And remember this, when the bank controls your money, when the accountants count and control your money, you're not in control of your income or your wealth or your labor. You've given title and responsibility to others, and when others manage your money, they'll squander your money for you. I've come to the conclusion I can squander my money just as well as any accountant or any government or anybody else, and so I'm going to take care of my own money. And you have a little problem here you want to keep in mind, because pretty soon what they're going to do is take these green notes and exchange them for blue. Our monetary system is about to collapse, and when it collapses, you know, there are people that have hundreds of thousands of dollars worth of these greenbacks, and then your government's going to compel you to take them into the bank. And then, well, where did you get these greenbacks, and did you file taxes on them? And what if you have $100,000 worth of $100 bills and you don't have your tax returns from 1948, 49, and 50? And look at how much you've lost between 48, 49, and 50 and 78, 79, and 80. You know, they're nothing but a scheme whereby they depreciate in your value or devalue your wealth. So you cannot store your wealth in Federal Reserve notes. And then when they issue blue ones, they'll give you about 2 weeks to turn them in, and then they'll know all about your wealth. I'll tell you how we do it here, or how we recommend that people take care of it. Any checks that you get should just go right down to your coin dealer, or cashed at law converted to Federal Reserve notes, depending upon your circumstances. And then store your wealth in your basement. Bury it in the ground. You control your own wealth. Stop letting the banks and Citibank and David Rockefeller control your wealth.